What's up, everyone? It's your boy Shotgun Gabe, reminding you guys that if I can do it, you can do it. Shout out to everyone wearing red ribbons. Today we are talking about ETFs. What is the ETF? When should I get one? What do they include? Stay tuned, we'll get into it. So ETF is an exchange-traded fund. An ETF can be looked at as a mutual fund, and it holds things from stocks, bonds, currencies, commodities like gold and silver. And most are index funds, but you cover a specific area or sector is how I should say it. So let's take a look at one real quick.
For this example, I'm going to use two ETFs. One's MJ and the other one is SPY. So say you want to invest in something, but you're not sure where to invest in. And you want to cover a certain area, but not a company in particular. Or you want to protect yourself from a certain sector going under. So if we look at an ETF and we'll pull up SPY, and we can see different numbers right here and where the stock has been growing, because it can be traded like a stock on a stock exchange. But the difference is they're invested in these companies. So when you buy this ETF, you're buying these companies, you're buying into them, and they cover certain sectors, certain commodities, currencies, bonds, stocks, or whatever. And say you're invested in health technology and you have a lot of it in your portfolio, but you want to diversify a little bit in case this has bad days, bad weeks. So if you invest in this, if this has a bad day, these other companies are holding you up. You like health technology a lot. You really like it. So you want to invest in this. But in case this goes down and has a bad week, you got these areas to protect you. So on top of that, if this has a bad day, short-term investors are going to be pulling money out of this area, out of this sector, and they're going to be redistributing. And there's the potential that they will distribute in these areas. So you also gain from that. And there's a potential that people pulling money out of here for short-term trades will invest it in these companies. While this is down, these other companies or these other areas may go up. So if health technology has a bad day, short-term traders will most likely pull their money out and invest it in technology service, invest it in electronic tech, finance, retail trade, or whatever else. And this will help push up these other areas potentially, right? Because if you're losing money on something, you're going to pull it out and put it somewhere else, correct? Most ETFs, if not all of them, have dividends. And you can look up and you can see the dividend and the payment date along with what areas they're invested in. And this is just looking at it on Webull. I like this a lot. Berkshire Hathaway. If you can look into Warren Buffett, he has a lot of good information. Look up his videos, read about him. He's a really smart investor. I mean, there's a lot of knowledge from him that you can learn from. But that's pretty much an ETF. So it exposes you to different areas and not all your money focused on one area like when you invest in a stock, but it's traded like a stock. And you can also see the asset allocation, stock, bond, cash, others where they're invested in their quarterly, right?
So to wrap up, an ETF is like a stock but exposes you to a whole area, a whole industry, a whole commodity, or one particular commodity. And when this is more beneficial is for people who like to let their money sit. They want to put their money in something and watch it grow, or when you're trying to protect yourself or diversify your portfolio for bad weeks, bad days, whatever it may be. This in particular, I like to do growth, and I was using MJ as a example, I said, right? So MJ exposes me to a whole area. I was invested with ACB for a while back and they weren't doing too much, and I knew this sector is going to take off. I knew with so many people, so many states legalizing and more people being norm about it, just going to buy something to smoke, edibles, whatever it may be. I knew this industry was going to blow up, but I wasn't too well versed on what companies. I didn't have too much time to look into them. So better than investing in a stock, I decided to invest in the MJ ETF because I believe not only is this going to have a lot of growth, but the dividend is going to grow and it's going to be paying me as well. And this is a long term. I put my money in there and let it sit. So if you're invested in something and you want to protect yourself, or you want slow growth that's not going to go up and down really fast, but just gradually become more and more and more valuable, this is a great time to do it. ETFs are good to have in your portfolio, and I have some in my portfolio. But remember, I'm just a stranger off the internet, so don't take everything I say as financial advice, but do your research. I suggest everyone having some ETFs in their portfolio. You want to get in the EV? That's a good play right now. You want to get in MJ? That's a good play right now. At least that's what I think. But like I said, I'm just a random stranger on the internet. So go ahead, look into these, and if you haven't put an ETF, please strongly consider doing this, because over time you'll see that steady growth is going to help your portfolio and your financial all together. Thanks everyone. Have a good day. Hope you liked the video. See you guys next time.